All right. Hi, guys. This is Sandy. Wanted to do a quick video on things to consider when you're buying a home. Just wanted to go through a few things with you. Each quarter, we have a new pamphlet that we do on things to consider when buying a home, and we also have one entitled Things to Consider When Selling a Home. And they're very updated because, as you could see, this one is for fall 2021, right? So it's our 2021 fall edition. We're in Florida, and I'm pretty sure we don't have that much of a fall, but in any event, for people who are relocating from areas where there is fall, why don't we dive into that, right? Let's consider what to do. Now, these reports that we design, we do them quarterly, and you could just send me an email or a text and request a full copy, because I'm going to kind of browse through it because I can't go through all of it on a video. The video would be way too lengthy. But what I am going to encourage you to do is text 407-791-4713 or send us an email. Our email information should be somewhere in the screen or below the screen, and we will send you a full copy. It could be through email, or we could mail it out to you so you have the entire version, right? We mail this out to a lot of our buyers and sellers every quarter, and they find a lot of interested information in it. And they also give it to their coworkers and friends as well, because we get a lot of information in here. So buying a home this fall, as you guys are aware, we're in a very aggressive seller's market, right? Homes, we have very low inventory, a lot of buyers on the market, not enough homes to sell them. The builders aren't building fast enough because with the builders, they're also short materials. So what's happening in this market is we have a shortage of home. And if you're looking to buy a home now, how do you compete with this? There's a lot of bidding wars. There are just insane craziness going on. You could overbid and still not get the property. That kind of stuff. People are not writing letters. There's a little thing about the letter stuff as well. So it's a lot of craziness going on. And the more informed you are, the better you'll be able to get the home that you really want. And yes, you can get the home you really want. It just takes a lot of education and patience to get it. So earlier this year, the number of homes available for sale fell to an all-time low. In recent months, however, housing supply has started to trend up. This is good news for buyers who crave more options, right? And the question now becomes, buying is more affordable than renting. And we know that it is, right? If you look at this chart right here, you'll see that the overall renting of a mortgage payment within a studio, one bedroom or two bedroom is $1,255, right? That's what you'd pay basically per month for your mortgage on one of these items. But look how much rent you'd be paying on the top, right? And because there's such a shortage of homes for sale, rent prices are going up. Now, property values are also going up. And you might say, well, why do I want to buy something so high? But think about it, guys. If you buy something now, it's going to keep appreciating in value. Even if it drops and doesn't appreciate, the market will turn, right? So if you're living, look at it this way, you have to live somewhere. Are you going to be paying your own mortgage, or are you going to be paying somebody else's mortgage, but you're going to be living somewhere? And why not live somewhere where you own and no one could tell you, what to do, when not to do. Oh, I need the house, I can't extend the lease, all that great stuff, right? So it's a good idea for you to own if possible, right? Why would you want to not do that, right? So because here's the thing, and I know someone will be like, what do you mean? That's been so arrogant. And I don't mean to sound arrogant, but think about it this way. Let's say, and a lot of people are caught up with the 30-year mortgage. I don't want to have a loan for 30 years. And the reality is most people do not live in their houses for 30 years. And the reality is most people sell their home every 5 to 7 years, right? So the mortgage is amortized over 30 years to make it more affordable. Because if you're thinking about a loan of $350,000 spread over 30 years, that's much more tolerable than if it was the same loan spread over 10 or 15 years, right? So even though it's a 30-year mortgage, doesn't mean you're going to live in the house for 30 years to pay it off. You live in the house for 5 to 7 years, the house is going to appreciate, and you could sell it and repeat it, or you could sell it and not buy again, right? Depends upon where you want to go with this. So our report here gives a lot of insight on where we think the market is trending to, what's happening in the market industry as far as buyers is concerned. If you're looking for a home but are having trouble finding one, stick with it. Today's low mortgage rates are still in your favor, right? It is less money, guys, to buy a higher priced home with a low interest rate than it is to buy a higher priced home, a lower priced home with a low interest rate, with a higher interest rate. So if you bought a house for $200,000 and the interest rate is 10%, you'd be paying more than if you bought a house for $300,000 and the interest rate was 2% or 3%, right? So interest rates plays a big factor, and the lower interest rates remain, the more people are going to want to buy, because it makes sense, right? The monthly, you could buy more home and still not have a very high mortgage, right? And then looking across the US month over month, the changes in housing inventory has fluctuate, right? Depends upon where you are. We're down here in Florida, all kind of fluctuation going on. You know, I was talking to a lender and he was saying to me, it's amazing, and it would be funny if Florida becomes the new California. We all know California home prices are insane. And wouldn't it be funny if, as the prices keep going up, Florida became the next California, since we have similar weather? Matter of fact, I think we're warmer here in Florida, right? So what does all this mean for you? This increase in homes available for sale is good news for buyers. If you're ready to buy and you're having trouble finding a home, take comfort in knowing that more options are already coming to the market, right? More people are now listing their home because they're realizing how much they could get for their home. And also more sellers are like, you know what, we don't really need to keep this home. We could sell our home and buy another home. And there are companies that are allowing sellers to first buy the home they want, right? Then sell the home that they're living in without having to deal with two mortgages. And as these programs, it's called a bridge loan. And as bridge loans become more popular, then we're going to find more and more people doing that. So there's a lot of information in here. I'd encourage you to give us a call or send us a text. I'm just kind of slipping through the report so you can kind of see what's going on here. Hey, here's a great example. Look at this. We were just talking about this. I didn't even realize it was in the report, right? They're comparing today versus next year, right? So they're saying today this home that's going to be costing $350,000 today, in a year, the same home is going to be costing $367,920. So there's going to be a $17,000 difference in the price between this year and next year if the market continues what it's doing. So if you were to buy the same house today, you'd only need $35,000 down. But if you bought it next year, you need $1,792 more, right? Look at the mortgage amounts. You're going to be spending $16,000 more in mortgage if you buy it next year. The interest rate, if it climbs, is going to be almost 1% more. And look at what it's going to cost you per month. This is some serious data here, guys. It's going to cost you $239 more in mortgage payment if you keep waiting to purchase, or if you wait for another 12 months if the market trends continue. And that's what they're kind of predicting that it will, right? So $239 more in your mortgage payment is a lot. But there's a lot of things you could do for you and your kids, or grad kids, or even for yourself with $239,000 more. So that's kind of what we want you to pay attention to as you consider buying a home, right? You don't want to keep waiting. A lot of people are like, we're going to wait for foreclosure. I don't think, here's what's going to happen, guys. Number one is, I don't think the big numbers of foreclosure that people are thinking is going to happen. I don't think so. Secondly, the foreclosures that will be coming on the market, guess what? The banks know the prices are high. They're not going to list a foreclosure for less than market value. I could see the banks sending their own people to go in there and make the repairs and putting the property back on the market for fair market value. That's the thing. And even if they put the property back on the market and it needs repairs, I saw a foreclosed property on yesterday, actually. It needed a new roof. The roof was leaking. It destroyed the ceiling. The bank says we're going to replace the roof, but the buyer got to replace the ceiling, got to do the repair in the ceiling. The median price in that area was like $385, about something like that. And the bank has this property listed, guys, at 375, $10,000 less, not much. Now, back in the day, if a home came up in a market where the median price was 385, you would think that the foreclosure would be like $300,000, maybe 310. That's not happening. The banks are also going to cash in on equity. So don't think it's going to be a situation where even if the property comes up on foreclosure, it's going to be a huge difference. It's not. And are we really in a housing bubble, right? What's going on? The conversations around price and affordability are leading some to question whether the real estate market is a bubble ready to pop. Experts say it's not. I tend to agree with experts. Why do I agree with the experts? Because the banks are being very strict in lending money. Some of them might even want your firstborn or a drop of blood, right? They're being very serious in what they're lending. And buyers are now qualifying to borrow money from the bank. They are literally qualifying. And another thing is, guess what? People are bringing excess money to the closing table when the property does not appraise. And that's super important, because what used to happen was before the property was being overappraised back in 08 and 09, or back when the bubble burst in 08 and 09, right? In today's world, if you're buying a property for $350,000, the first thing the seller is saying to you is, if the property doesn't appraise, do you agree to bring the difference to the closing table? So homes are selling high, but buyers are making up the difference, right? So the market is not being oversaturated with properties that are not being appraised. That's the thing. So that's why it's not going to be a bubble, right? So I'm going to encourage you to get a copy of this report. We have it every quarter. Right now it's October of 2021. We're going to have another one coming out in the winter months, in December, November, December, something like that. I know we don't have winter in Florida, but maybe you do. And we have a lot of different things in this report. There's also these different phrases that we kind of explain to you what they mean. All of this is a part of you buying a home. We know that the bank is going to ask for an appraisal if you're financing, right? Some banks, if you're putting more than 20% down, they'll waive the appraisal. You know, you have to have a pre-approval letter in order for you to make an offer in almost every market I know of. You know, you're going to have closing costs, which is a lot of it have to do with lender related causes. That means the cost of giving you the mortgage. What is a contingency? A contingency is where the purchase is contingent upon. For instance, if you're buying a home for $350,000 and you have to get a mortgage, then the offer would be contingent on the mortgage, because if you don't get the mortgage, you cannot buy the home. Another contingency may be home inspection. They're going to give you a certain amount of time to do your home inspection. You got to do your home inspection, let them know if there's any problems with anything, and report that to them before you go forward. So that would be a contingency. Another contingency might be an appraisal, right? And we just spoke about that. A lot of sellers are not going to allow the appraisal contingency. They're going to say, we don't want an appraisal contingency. If the property does not appraise, you have to bring the difference to the closing table, right? We all know what a credit score is. The higher your credit score, the more borrowing power you have and the lower interest rate you'll pay. Affordability is where the lender is looking at how much home you could really afford based on your debt to income ratio. Down payment, the down payment could range anywhere from 3 to 20% or even more, right? There's some zero down program, but they're not that popular right now because of the way the market is. Equity is the value of what a homeowner has in their home after debt services. So that means if a homeowner had a home that was worth $350,000, but they owe the bank $200,000, then they would have $150,000 in equity in that particular home. Mortgage rate. A mortgage rate is what the lender is going to be lending you, what the rate will be, what rate you qualify for. And this is going to have a lot to do with your credit, right? So the closer your credit is to 850, the lower your score will, the lower your mortgage rate will be. And the closer it is to 300, the higher it will be. You know, I don't think there's anything as 300, but I've never seen that, but that probably exists. All right. So we also go over the path to home ownership, right? How you save your down payment, how you try to improve your credit score, how you find a real estate agent, how you find most real estate agent will work with a preferred lender, right? How to get pre-approved by their preferred lender. Then you go to finding the home. Then you got to make an offer on the home you find. And if the offer is accepted, then you'll have a little contingency period to do your home inspection. Once that's done and you're going to move forward with the property, you're going to do an appraisal of the property. The bank is going to do their processing to give you the mortgage. And then you close the sale. And then guess what? Now you're a homeowner. So guys, this is Sandy. I don't want to go over too much of this, but this is Sandy. I'm with the gift group with Preferred Real Estate Brokers. And I'm going to encourage you to get a copy of our quarterly report. It's all for buyers. If you're looking to buy, this would be a great thing to have. We go over a lot of information in this regarding buying a home. Here we have things to avoid after applying for a mortgage. This is very, very important, guys. So many people qualify for a mortgage and then get themselves disqualified because they go out and they buy a car, or they start to get more credit card, or they go in a furniture store looking to see how they're going to furnish their home. And next thing you know, they're putting furniture on credit. So there's a lot of things to know to avoid after doing a mortgage. Some of the things you should not do after applying for a mortgage: you should not change jobs. You cannot apply for a mortgage and get approved and then change your job. You will not get, that's going to be a big red flag, right? You cannot change bank accounts. If you're looking to change bank accounts, do it before you apply for the mortgage. Do not change your bank account. Also, do not put any big amount of deposit in your bank account without first discussing it with your lender. That's going to be a red flag for the banks because of money laundering. So if you're going to if your mom is going to lend you some money to buy the home or whatever it is, you got to discuss it with the lender. Your mom is going to have to give you a gift letter. Okay. You don't want, even though you're going to get a brand new home, do not go get a brand new car until after you close, because that will also affect your credit score, right? So these are some of the things that affect your credit score that people don't normally think about. And during the time of when you're buying a home or applying for a mortgage, you cannot co-sign for anyone, right? You can't do no kind of co-signing during that period of time, or you cannot do that because that will affect your purchase. Now, here also in the report, we have 5 tips on making an offer. So I am going to tell you to text us at 407-791-4713 and request a copy of this report. If you're watching me after October 4th, 2021, and it's maybe if you're watching me next year, 2022, guess what? We will have a report that's conducive to you. These reports are done every quarter. So when you send us your information, request a copy of our buyer's report, we're going to give you the one that's conducive to the time period that you're in, right? To when we get the requests, right? And you could text or email us. Some information should be here, letting you know that. Again, this is Sandy. I specialize in the Central Florida area. I am a licensed real estate broker and agent, and I would love to help you to find your dream home. Okay, I'm going to stop the video now, and I will see you in a bit.